Good evening. This is Ken Long from Tortoise Capital with a review of the weekend trading report for October 25th, 2014. The Thunder soccer team has a championship game to go to tonight, so I'm going to record this and hang it on YouTube, and that's why we're not having the webinar tonight. So let's get on with it. We are in bullish volatile conditions. We just moved from sideways volatile back up into bullish based on the bounce this week. On an annual basis, using weekly RSI 14, we're at the upper end of neutral now at 56 out of 100. And on a 10-day basis, using 10-day NDX, we are at overbought conditions at 100 out of 100. Looking at the market mosaic, long-term price relative to the 200-day moving average, 3.63% above the 200. That puts us in red bullish because we're more than 2% above the 200, and red because it's still among the worst 15% of the readings in the last 6 months. The slope of the 50-day moving average is still red bearish, but it just tips slightly favorable at 0.06, slightly positive, that is. ADX 22.2, we're back into neutral, non-trending behavior. The ATR percentage at 1.80 is still volatile. The risk index is the 30-period moving average of the VIX divided by the 10-period. The threshold between risk on and risk off is 1.0. The current reading is at 0.87. That puts us into risk off conditions, meaning the less risky assets are still favored. If we take that score of 0.87, compare it to the last 5,000 days, and find the standard deviation, we are at a z-score, or a risk z, of minus 1.71. So it's an extreme condition in the risk index. Excuse me. This histogram is a 90-day time series of that indicator. You can see that it's gone from the zero line to a z of minus 2 to plus 1.5, and now all the way down to, it was just below minus 2.5. And this uptick now suggests it's time for us to be stalking a swing trade in XIV as the volatility begins to decay. Blended monthly rebalancing, these are the holdings from 1 October. The next reevaluation is due on or about 1 November. These are the current symbols that are in leadership positions in each of these three ETF portfolios, and then the leading candidates in the stock and ETF portfolios that you see here. These become very favorable relative strength candidates for longer-term positions. The theoretical model in ETF2 is at 0%. The model portfolio is at 50%. This is just a quick look at the ETF 13 and 32 portfolios. You can see that the U.S. is now coming back under buy conditions, and you see that reflected in the 32 ETF as well, still dominated by the U.S. and technology. ETF Max looks at the same, looks through the same lens at about 1,300 different ETFs, and these are the top relative strength winners. Coffee should be of interest because it's green and white, and so are the U.S. deflation and PowerShares U.S. dollar index. This is the S&P 500 looking through the same lens, and now this refers to the S&P sector spider that these are members of. U.S. Steel has come back online to move up back to the third position. Ross Stores is interesting at green and white, as is VeriSign and Leggett and Platt and Crown Castle. The ones that are white and green are ones where we're seeing the shorter term returns starting to decay. So that's Lam Research, for example, and Apple. In the market health check, you can see this nice bounce that has happened in the last 5 days. The vertical blue lines are 10, 20, and 30 days worth of look back. The horizontal red lines are support levels that were once resistance levels. They are price targets on the way up, support levels on the way down, and if they fail on the way down, then they become price targets for short side positions. The sine wave looking black line here with the blue circles, that's the slope of the 30-period regression line and key turning points, and you'll notice that we've gone from a plus 0.4 or 0.35 on this, which is very nearly steep up all the way down to a minus 0.42. This was extremely steep because the 2 standard deviation limit on this is minus 0.2. So this last 30 days from the peak down to the trough was extremely downward sloping. It looks like we've put in the beginning of a turning point here as the slope of the 30 has started to roll up. And the last time it did that, that was followed by a nice move. Well, we've already seen the first part of that move as prices move from Z minus 3 on this outer Bollinger Band all the way up to the Bollinger Band mean here at Z plus 0. So the river is this dark blue shaded area in the middle. That's the 30-period Bollinger Band plus or minus 1. The floodplain is Bollinger Band 30 plus or minus 2. The outer red lines reflect a plus or minus 3. And so we've had a nice pattern 7 Z trade from 183 to 196. The river has slightly rolled over. You can see the 30-period regression line and channel here in black, the 10-period in blue, with the move is well underway, back up to test the previous high. You can see we've gone on %R from oversold to overbought. That's the channeling pattern. The percent price oscillator closed out here. What I like about this is it gets us an alert into potential turning points at significant swing moments, and that alerted us here when the price re-entered the river that we may be in for a few more days of gains, and that's ends up being what happens. So this is a market that has recovered. The world's not going to end. Ebola is apparently manageable, and we're right back at fair value or the 30-period Bollinger Band where we're going to prepare for the next leg. Is it a return to test the highs at 200, or is it a return back to the bottom of the river and resume channeling? We shall see. This is the ETF2 regional report. We've got 20% invested, 80% cash in the theoretical model. The S&P at 79 is still better than EFA at 63. Inside the U.S., the order of merit is technology, then large caps, then mid caps, then small. The 2 strongest sectors are tech and U.S. large caps. The 2 weakest are Latin America at 59, and then EFA at 60. I should say that's Europe at 61. So Europe continuing to lag. Inside the U.S., the strength is in the defensive plays, staples, utilities, and healthcare. Weakness in energy. World market model, everything in the U.S. is now back above average, with technology exceptionally strong. Japan and Asia list Japan below average, everything Europe below average. A few key leaders in Asia with China, India, Thailand, Philippines. Only South Korea lagging extremely, and then Australia, Malaysia, Singapore, and Indonesia lagging. Latin America is now back into the red, as is Brazil. They've gone from the red up to a leadership position in green, and then back into the red. But I have been stalking them for short-term swing trades as well. Canada and Mexico below average. Everything Europe and all the countries below average, the red ones exceptionally so. You can see that the defensive sectors, staples, utilities, and healthcare are strong across the board, both in the U.S. and global. But in each case, the U.S. sector is measurably stronger than its global counterpart. The dollar continues to be strong against all currencies. The ETF top 30 using the ETF2 lens. Again, I like to look for things that are in the green followed by white. That's the emerging strength. And too numerous to note there, but I'll leave that to your attention and study. The ETF 30, you can see the strength right here in the U.S. large caps, just how many of them are in the green. And this is in comparison to the entire database of 1,300 ETFs. So you can see how strong these U.S. large cap defensive plays have been. I'm very interested in Coca-Cola, especially with that 5% hit it just recently took. I think that's a chance to buy Coca-Cola on sale, and I think the market will see that as an opportunity as well. Merck, Walmart, and DuPont are all starting to emerge, as is Travelers. Only weakness measured right now in United Tech and Caterpillar. Looking at liquidity, just for your reference, the short-term VIX, the ATR percentage, almost at 11%. Double VIX at 24% daily volatility. Shifting to the daily for Monday. Swing signals to the short side for EFA, Asia less Japan, and Europe. So on weakness, those are shortable. Only a couple signals in 551W for the ETFs, but we have a number that are set up well in the auto framer. You can see the 10-day max pain in the Dow. These are ones that are relatively weak, and then the 10-day min pains are the relative strength leaders. You can see the volatility has started to peak and roll over. This is why XIV now becomes very interesting. If we should see a return just to back to normal volatility, I'd expect a nice corresponding move in XIV, so we're stocking that one. The tactical summary, we have IBM and Coke setting up well on the auto framer, a bunch of dojis to consider, and then Coca-Cola on a channeling. That's why I'm interested in Coca-Cola. Quality on sale. In the ETFs, a half a dozen on the auto framer test out well, triple screens and a doji in the VIX, and then a channeling here in treasuries. Brazil and Latin America are very interesting here. You can see how they've reversed the trend, the one-day trend, very strong, and that's either a dead cat bounce or an opportunity to buy those large markets as they rebound from the sell-off. And I favor the second example. Quick look at the auto framer and the regression line fractal framework for your reference. And that's everything I want to cover for today. This is Ken Long from Tortoise Capital. We're anticipating still good short-term trading opportunities. The intraday trade is still favored because we've just recently tested that sideways market. We're still volatile. The bull is fragile. More news coming. And so I still think this is a chance to really leverage your intraday skills. Otherwise, I'm looking at swing trade opportunities for the U.S. defensive large caps in the staples and healthcare sector as a way to start rebuilding positions that may have been cashed out during the drawdown. So that's where I think the longer-term money should be focusing. So it's Ken Long from Tortoise Capital. Keep your risk measured and your powder dry, and let's go Thunder. Let's bring home the trophy tonight.